So when I go around the internet, I'm doing a lot of research. I do screen grabs. I take certain things that stand out to me that I want to show you. And these are just the scraps of the work that we did so far this week. There's an amazing interview I want you to see that explains why gold prices have gone up so much, but gold stocks haven't. We get into all of that in this video. Plus, we're talking about the expansion of OPEC and also the expansion of some of the war in the Red Sea.
Why isn't Sandstorm's share price performing better now that gold is over $2,000 per ounce? That's a fantastic question. I do have an answer to it. And I do think that Sandstorm, as well as some other gold companies, we're going to have a catch-up trade that is going to happen. And I think it's going to happen in not too long.
Did you hear what he said about the catch-up trade? I believe we are going to have a catch-up trade. And that's what I've been talking about in a while. You see how he said in the not too distant future? Also, what I've been telling you, I cannot believe the gold stocks are not performing even better than they are, given the environment that we are in.
There's a bigger, deeper fundamental reason why gold equities, including Sandstorm, have not kept up with the price of gold. And you have to think about two separate, distinct buying and selling groups that exist out there in the world. The first being your average individual investor and or institutional investor as a group. As a group, they tend to buy gold as a group or sell gold as a group, depending on what's happening in the market. And central banks and governments of the world being the other group.
And you guys might like that we're ad-free and sponsorship-free. You can help keep us that way by joining the Peter Leeds Army, link below. Now pay attention in this next part, the portion where he's talking about the number of institutional investors selling gold, how much gold they've been selling, and what time period.
Institutional investors for the last 18 months, as well as the average retail investors, as a group, on average, have actually sold gold 15 of the last 18 months net. You can go to the world's gold ETFs and just use them as an example of, is there fund inflows into gold ETFs or are there fund outflows out of gold ETFs? And for 15 of the last 18 months, this group has been net sellers of gold and gold ETFs, which include things like Sandstorm. So on a net basis, this group has been selling gold.
And just ahead, we're going to talk about the expansion of OPEC and the expansion of the war, two different things, not related. But first, just a couple more clips I want to show you just to round out this conversation.
On the other hand, the governments of the world and central banks of the world have been massive net buyers of gold. They know something that this group doesn't know and are buying gold because of it. They are getting longer and longer gold for a reason. It's because they know what the future of the world's monetary system holds. They know the risks that exist out there because governments have levered their balance sheets up to here, and most governments are functionally insolvent around the world right now. They are buying gold as a protection mechanism against that.
And speaking of where the economy is heading, and if you want to know where the economy is heading, see the video that I put out Sunday afternoon. I'll link it at the end of this video and below as well. It'll tell you everything you need to know and ask for your opinion about what you think is going to happen with the economy. In this next clip, I want to show you everything that's going on with the war in the Middle East. Not everything, I'm sorry. I want to show you some clips about the reason I pulled out this clip is because I want to show you that it's all about the escalation ladder, where something happens and the other side counter punches, but they keep it within reason. There's a certain escalation expectation among major militaries. But anyways, this is all talking about how things are going to get worse and worse because there's a lot of groups that want things to get worse and worse, and they have the power to do that, to make that happen.
Escalation is a sliding scale. And I think it's pretty safe to say that since October 7th, there have been multiple events, nonstop, almost daily events that have in one way or another been a form of escalation, starting with Gaza and now spreading across the broader Middle East.
Well, Josh, just two quick things. The Houthis conducted another attack yesterday against a U.S. ship, the USS Laboon. The Laboon was able to destroy that inbound attack UAV. So we have to keep in mind that the Houthis, while it's quiet the last couple of days, except for that attack, is probably they're refitting and resupplying from Iran on that.
And now we're going to get into OPEC and how they're expanding. And I told you that there will be more oil wars as we approach the day when we run out of oil. We're talking about a few decades, probably 40 years or so, and we'll be completely dry of oil if we maintain the current extraction rates, the current usage rates. This next part talks about how the BRICS nations are expanding. There's Brazil, Russia, India, China, South Africa. And now pay special attention to specifically and most importantly, out of all of this, is the fact that Saudi Arabia is joining the BRICS nations. And that means so much for the petrodollar, the world's reserve currency, the credibility of the BRICS nations' coins or currency.
In addition to China, existing BRICS members include Brazil, Russia, India, and South Africa. BRICS was established in 2009. On January 1st, 5 new members have joined. Oil-rich countries like Saudi Arabia, the United Arab Emirates, and Iran, along with Egypt and Ethiopia.
And it will be backed by gold, which explains all the massive gold buying that China's been doing all this time, which we talked about that's probably why they're doing it years ago.
The BRICS alliance is described as highly diverse. Its primary goal is to establish a counterbalance to the West, especially the United States and the European Union, and potentially introduce its own currency as an alternative to the US dollar.
And just in case you think that the BRICS nations' currency will be valuable or significant compared to the euro, the US dollar, the Japanese yen, listen to this part here.
The new BRICS group represents about 1/3 of global economic power and just under half of the world's population.
And I know this isn't related to the Middle East at all, but some of your viewers might be seeing things on North Korea. There was an exchange of artillery fire along what we call the northern limit lines off the west coast of the Korean Peninsula. This is something we see frequently, but what's really happening is that this could be a flashpoint.
These groups do not buy gold equities. So they're driving up the price of gold, while this group is driving down the price of gold equities. And eventually those two things have to reconcile. I believe that once interest rates start coming down in 2024, and it becomes less from an opportunity cost perspective to own gold, that this group will start buying again. They will be buying the GDX, they will be buying the GDXJ, they will be buying gold ETFs, and they will be buying gold equities. And I believe there's going to be a massive catch-up trade when that happens.
But if you guys like that we're sponsorship free, so you don't have to listen to these big ads all the time, that we're ad free, that we're independent, and you want to keep us that way, please help show your support by joining the Peter Leeds Army.